Hello, everyone. Welcome to Finance Bites, and thank you for joining me. I'm going to wait a couple more minutes to allow everyone to join in. Great, let's get started. I am Sylvia Blount, and I'm an instructor at the American Institute of Finance. I'm an investment banker specializing in mergers and acquisitions, and I'm also licensed security license series 79 and 63. So since this is our first Finance Bites class, I want to give you a general idea what you should expect from this new web series. Finance Bites are 15-minute webinars that provide our audience with relevant financial topics and their most important features. The goal here is to give you a general understanding of a financial product or process in just 15 minutes. So today we're going to talk about the IPO process and some key market data as well. This is obviously a pretty complicated topic. You'll most likely need more than 15 minutes to fully understand it, but at least you will get a good grasp of what an IPO is. Great. As always, some housekeeping tips. As a reminder, this session is being recorded and you will receive the recording via email after the session, and the class will also be available on our website and all social media. All attendees are in listen-only mode, but feel free to ask questions. I always encourage you guys to submit your questions while I go over the material. And then depending on how much time we have left, I will answer some of your questions at the end of the class. Awesome. So for today's agenda, as I mentioned, we'll go over some key IPO dynamics. So what's an IPO, and again, some aspects to consider while going IPO. Then the IPO registration process. And finally, we're going to talk about some current IPO market data and some weekly recap. Awesome. So before we dive into the actual process, what's an IPO? An initial public offering, or IPO, is the first offering of a firm's stock, or so-called shares, on the stock market for the very first time. Right, did they go public? Because the stock market usually looks at the growth of the company and the growth story of a company. IPOs are typically a good opportunity for founders and early investors to make high profits, in a sense, and to cash their holdings. Now, before a company can actually go public, there are a few key aspects that business owners should keep in mind. This includes setting up an efficient and streamlined financial reporting system. Right, so make sure that the financials are audited. Then have a trusted and reliable management. So obviously, this is a key element to have before you think about going public. Then choose your investment bankers, with the appropriate background. Perhaps if you have a specific, your company works in a specific industry or segment, it's good perhaps to have investment bankers that have a good experience in that sector, and obviously know the process very well. Then fourth, select the type of offering. You can have a couple of different types of offerings. The firm commitment or best efforts commitment. Essentially, the firm commitment is where the underwriter buys the shares of the offering at a discounted price, and then they'll be able to resell it at the public offering price. Well, whereas the best effort type of offering, the underwriter does not guarantee all shares will be sold, but makes a best effort at selling the shares. So those are the two different types of offerings. And then finally, write your company's story. So this is very important. Obviously, you have to be able to tell the public and your future investors, what they will expect to gain by investing in your company. So the growth story and also the story of the company prior to this IPO are key elements here. Now, once you're ready to start the actual IPO process, we can identify 5 key steps here. So the first one is whereby the issuer starts negotiating with the underwriters for the sale of the stock, right? After some negotiation here, the issuer selects the underwriters that will take the company public, and they signs an underwriting agreement. Then secondly, the issuer and underwriters will compile the SEC registration document, which is also referred as the S1 registration. So the issuer then files once everything is ready to go. Once the document is compiled, then the issuer will file the SEC with the SEC. Notice that here we say the issuer will file the S1 because in the liability, in a sense of issuing the S1, is only, I would say, primarily to the on the issuer, right, more than the underwriters. And then thirdly, we can start finally the pre-marketing period, where we are going to have, or we're going to use the red herring prospect. So this is also where the issuer and underwriters will decide the initial price and the number of shares that will be offered to the market. And as I mentioned, the IPO prospectus, or red herring, will start to be utilized by underwriters and management during roadshows to generate some interest, some preliminary interest with institutional investors typically. And then fourth, we have the registration statement finally becomes effective, and the issue is sold to the investors. The shares then will be listed in the appropriate exchanges and will be able to trade in the second market. And then fifth step, the underwriters create a profitable market. So that means that if there needs to be some stabilization, they will have to, act on it. And in case there are any imbalances, they will purchase the shares of the issuer. So these are, the 5 key steps of an IPO process. Obviously, looking at each of them, there's probably, some more details and some additional steps that you may take. But the overall this is an overall overview on the process, the IPO registration process, right? Now, since you guys fully understand the IPO process, we can talk about actual IPO market data. So some key points here that are relevant in today's world and today's IPO's market is that private consumer tech companies are rushing to file their IPO prospectuses so that they can go public before the end of the market. That's a trend that we've been seeing quite a bit. And then obviously it's been a big year for tech IPOs, and in particular September, we had a great month for tech IPOs, especially with listings on the New York Stock Exchange. And then notably the Airbnb, DoorDash, and a few other companies are planning to make their filings public by early next week, actually. And then finally, investors are looking heavily at SPACs or special purpose acquisition companies, right? They're very popular nowadays, also because they've been closing this company has been closing business combinations or M&A because public market valuations are fairly strong right now. Some key sectors, we have software, e-commerce, gaming, and then so far we had the best month of the year of October with 97 IPOs in the US market. 373 IPOs in the US stock market as of November 15th, 2020. And this represents a 75% increase compared to 2019 at the same time, which, back in November 2019, we had 213 IPOs. So a nice growth. Now look at the, let's take a look at the IPO Weekly Recap. We had last week only 8 SPACs went public. We did not have any IPOs. You can see 0 IPOs, but we had 3 SPACs filed for an IPO, and 11 IPOs also were filed. It's important to notice that DoorDash finally filed with the SEC to go public with the ticker Dash to raise an estimated $2 billion. Other notable filings, some biomedical research providers, in particular Seer, filed to raise 150 million, and then all the companies that you see in the second bullet points are raising actually 100 million. So biotech companies, BioAtla, Silverback Therapeutics, Kinnate Biopharma, and a few others are raising 100 million. Great, so we have a couple of minutes for Q&A, and as always, I want to turn things over to you and take some time for questions. As a reminder, you can type in your questions into the question box you can find on your right-hand side of the control panel. Let's see here if we have some questions. All right, so Mike asked, when is it a good time to go public? So that's a great question, because I would say that as a rule of thumb, a good time to go public is when you can accurately forecast your financial performance. So that's definitely key to a company to develop accurate forecasting and obviously budgeting functions while you're private, right? So that's a key step to create that consistency that you will need once the company is publicly traded, right? Because you will have reporting duties to your, and also in order to gain credibility with the investors. Size is also important. I always like to tell my clients that you should be at least at anywhere between 200 and 300 million in value as a company overall. And then I would typically also like to see several years of profitability. That's important also to support all this type of IPO activities and reporting. Yeah, finally, you should really exhaust the private investors route. So you should be, looking at perhaps doing some private placements, some Reg Ds, like we discussed before you think about going public. Right, let's see this question. Okay, we have Abel asking, how does an investment bank calculate the IPO price for a startup company with no historical numbers? Well, that's, in my opinion, that company should not be public. That's the straight answer, if you ask me. Especially because you need to have audited financial statements if you want to be listed and trading on the NASDAQ or the New York Stock Exchange. So you definitely need some growth story there, some good profitability traction. That's my quick answer on that. And the next question I see here: do I have to have audited financials to go public? Yes, you do. So you will need the latest 2 full years of audited financial statements in your SEC filings, and you can qualify actually for an emerging growth company. But most companies typically select to include 3 years of historical financial statements. All right. Well, great, guys. We had a few more questions, but we ran out of time. So thanks again for joining me today. And as I mentioned before, you're going to receive the recording of this session via email, and check out our social media and website for more information. You can also check out the Finance Pills page at americanif.com/financepills. And I'll see you all next time.